Welcome to the Deep Dive. Today, Palantir, PLTR, Q3 earnings. They crushed it, and the guidance is really aggressive.
Absolutely. Ready to dive in.
Our mission gets straight to the core numbers, the guidance, and this AI adoption story.
Yep. It's not just a good quarter, it feels like an inflection point, really driven by their AI platform, AIP. Let's hit those financials first.
Okay, let's do it. Q3 headlines. The sources all agree they didn't just meet estimates, they blew past them.
Oh, understatement of the year. I mean, the street expected good things, but this was, well, beyond bullish. Adjusted EPS, 21 cents.
Right, versus 17 cents expected. A solid beat.
A very solid beat. And revenue, the top line number everyone watches, $1.18 billion.
Way above the $1.09 billion consensus estimate, right?
Exactly. That's 63% growth year over year. Just huge.
And profitability, that's the other massive story here,
Yeah.
especially GAAP profitability.
Yeah, for a company that famously prioritized growth for so long, the GAAP net income, well, more than tripled.
Tripled. What was the final number?
Hit $475.6 million. That's 18 cents per share on a GAAP basis.
Wow, compared to about $143 million a year ago. So we're talking nearly $500 million. Pure profit
Yep.
in 3 months.
Yeah, pure profit. It's a huge milestone, signals real maturity, operating leverage kicking in. But, as great as those Q3 numbers were,
It was the guidance that really lit the fire, wasn't it?
that's what drove the market reaction. Absolutely. Forward guidance is always key for valuation.
And they weren't holding back. Q4 revenue forecast.
Between $1.327 billion and $1.331 billion.
Okay, and analysts were expecting, what, around $1.19 billion?
That's right. So, that's an enormous beat on guidance. Shows incredible confidence in their momentum carrying through year end.
And they didn't just guide strongly for Q4. The full year got a boost, too.
Oh, yeah. Full year 2025 sales, they're now guiding to about $4.4 billion.
Which, again, tops the Wall Street forecast. That was around $4.17 billion before the call, I think.
Comfortably tops it. And they double down on profitability, too. They expect GAAP operating income and net income in every single quarter of 2025.
Every quarter. That's a strong commitment.
It is. And adjusted income from operations for the full year, looking at $2.151 to $2.155 billion. Just really strong numbers all around.
Okay, here's something I find really interesting, especially for software nerds listening. The velocity metric, the rule of 40.
Ah, yes, the rule of 40.
Remind us quickly what that measures and why Palantir hitting 114% is just, well, explosive.
Right. So the rule of 40, it's a quick health check for software companies. You basically just add two numbers together, your year-over-year revenue growth rate and your adjusted operating margin.
And the rule part is?
The rule, the sort of benchmark, is that the sum should be 40% or higher. It means you're balancing growth well with profitability.
Okay, so 40% is good, 114% is.
It's extreme velocity. And look, they jumped from 94% in Q2 to 114% in Q3, a 20-point jump. In one quarter.
That's not normal.
Not normal at all. It puts them way past that standard threshold. Palantir themselves are even talking about a rule of 80 frontier now.
A rule of 80 frontier. So when you see a number like 114%, what does that tell you operationally? Revenue is accelerating and margins are expanding fast.
That's exactly it. It tells you their sales process, their deployment for this AI platform, it's becoming incredibly efficient, which is, the perfect segue.
Right. If the financials are that strong, we need to know what's powering it. Where is this 114% velocity actually coming from?
Okay, so the engine here, it's overwhelmingly one segment, U.S. commercial. And it's explicitly tied to their AI platform, AIP.
The CEO, Alex Karp, he called it an absolute juggernaut.
He did, and honestly, the numbers completely back that up. It's not just talk.
Lay them out for us. U.S. commercial revenue.
More than doubled. Grew 121% year over year, came in at $397 million.
121%. And even quarter over quarter, a big jump.
Yeah, 29% quarter over quarter. For a company that's been around this long, seeing 121% growth in a key segment is, well, it's astonishing.
It really is. But the big question is always sustainability with that kind of growth, isn't it? What are the risks? How do we know this isn't just a blip?
That's where you have to look at the pipeline, the leading indicators. Things like TCV and RDV, total contract value and remaining deal value.
Okay, unpack those for us. Because the TCV growth, that number really jumped out from the sources.
Right. TCV is the total value of contracts they signed in the quarter. And they had their best quarter ever for U.S. commercial TCV.
How much?
$1.31 billion.
$1.3 billion in one quarter, just from U.S. commercial.
U.S. commercial. And get this, that's a 342% increase compared to last year.
Whoa, okay, hold on. 342% growth in TCV. That suggests their sales cycles, which used to be known for being long,
are accelerating dramatically.
Yeah.
That's the clearest sign that AIP adoption isn't just happening, it's translating into huge long-term deals right now.
Okay, that makes sense. And what about RDV, the remaining deal value?
Also incredibly strong. U.S. commercial RDV grew 199% year over year, sitting at $3.6 billion now.
So RDV is basically future revenue already locked in from existing contracts.
Exactly. So you've got massive new deals being signed, TCV, and a huge backlog of future revenue, RDV. Both point to sustained momentum.
And it's not just bigger deals, right? They're getting more customers, too.
Yep. U.S. commercial customer count was up 65% year over year.
Mm.
So the platform seems to be reaching a broader audience, maybe moving beyond just those mega deals they were known for.
Okay, that's the commercial story. But Palantir built its reputation on government work. We can't forget that side.
Absolutely not. And the government segment is still performing very strongly, even with things like, a potential government shutdown looming during the quarter.
So how did government fare compare to that commercial juggernaut?
Still very solid. Global government sales grew 55% year over year.
55%. Still impressive growth.
Very impressive. And U.S. government specifically grew 52% year over year to $486 million.
So even with DC uncertainty, demand from agencies, military, it's holding up.
Seems incredibly resilient, yeah. Which speaks to how embedded their tools are.
Okay, so adding it all up, deal flow overall must have been pretty strong.
Yeah, they mentioned closing 204 deals worth at least $1 million. And 53 of those were worth $10 million or more. Just remarkable scale.
But connecting it all back, the common thread, the reason for the 114% velocity, the TCV explosion,
Right.
It has to be the product, right? AIP.
That's the heart of it. This whole Q3 narrative is built on the success and the rapid rollout of AIP.
And it's not just Palantir saying it's working. They're getting some serious backup from industry players. Key partnerships being announced?
The NVIDIA partnership is probably the biggest one strategically.
Why NVIDIA specifically?
Because it integrates NVIDIA's hardware, their accelerated computing, and AI models directly through AIP. So Palantir can take their core strength, what they call the ontology.
Right, the ontology. We hear that term a lot. Briefly, what is it? Why is it so important?
Think of it like a digital twin of an organization, a factory, a supply chain, whatever. It takes all the messy, disconnected data, spreadsheets, sensors, databases, and maps it into a single, coherent model of how things actually work.
So it creates context for the data.
Exactly. And then their AI platform, AIP, can run on top of that model to find insights, run simulations, suggest actions, without the user needing, a PhD in data science. It makes the AI practical, usable.
Okay, that makes sense. And NVIDIA's CEO, Jensen Huang, he had a pretty strong quote about it, didn't he?
He did. He called the Palantir ontology probably the single most important enterprise stack in the world.
Wow. Coming from the head of NVIDIA, that's quite an endorsement of their approach.
Huge validation. But look, to make this really hit home for you, the listener, we need concrete examples. How is AIP actually changing things on the ground?
Yeah, let's get specific. The sources gave a few good aha moments. American Airlines, for instance.
Right, American Airlines. Huge, complex operation. Network planning, scheduling, maintenance. It's mind-bogglingly complicated.
So what did Palantir do?
They used Palantir, used AIP to optimize all of that, and the result, in less than a year, they saved tens of millions of dollars.
Tens of millions. That's real money, fast. Shows that practical efficiency you mentioned.
Exactly. And then there's healthcare. Hospital for special surgery.
Yeah, they tackled insurance appeals, which is notoriously painful.
Super manual, complex process. They used Palantir to automate parts of it. Took a 45-minute manual task down to just 5 minutes.
45 minutes to 5. That's a huge time saving.
And they do it in only 5 weeks. Speed of deployment, speed to value, that's a recurring theme here.
Okay, one more. The energy sector, BP.
Yeah, BP used Palantir for, failure management. Apparently a massive cost center for them.
And the results.
A BP exec confirmed they're seeing triple-figure returns year on year from the platform.
Triple-figure returns. Okay, so these aren't small tweaks. This is fundamental change driven by AI.
That's the argument, yes. Fundamental operational resets.
All right, so we've got incredible growth, market-crushing guidance. The AIP product driver seems real, strong validation.
Yeah.
But we have to talk about the elephant in the room, the valuation.
Yep. Always comes back to valuation with PLTR. The stock's been, on a tear, up over 170% this year alone. Market cap pushing past $490 billion.
Which naturally makes analysts nervous, right? Is that price justified?
That's the debate. Many analysts flag it, saying it trades at an extreme multiple compared to other big tech companies, even ones with way more revenue. The argument is, maybe all this future growth, maybe it's already priced in, maybe even multiple times over.
So the numbers are great, but the stock's too expensive. That's the critique. How did Alex Karp, the CEO, respond? He's known for being pretty direct.
Oh, he was classic Karp. Went straight at the critics in his shareholder letter, called the detractors. Basically left in a kind of deranged and self-destructive befuddlement.
Befuddlement, okay. So dismissive is putting it mildly.
Very dismissive. He basically sees the skepticism as people just not getting the AI paradigm shift that's happening.
And he frames Palantir's success and the valuation that comes with it almost as a win for the little guy against the old guard.
He does, yeah. He talks about enabling the ruthless pragmatism of American companies adopting AI faster than anyone else.
Yeah.
And he positions Palantir as making it possible for, quote, retail investors to achieve rates of return previously limited to the most successful venture capitalists in Palo Alto.
So his argument is the valuation isn't hype. It reflects real, fundamental, democratized growth.
That's his core message, yes. Authentic, substantive growth.
Okay, let's try and pull this all together. We've unpacked just immense scale here. U.S. commercial, the juggernaut, 121% growth, driven by that incredible 342% jump in TCV.
Yeah, and guidance pointing towards $4.4 billion in sales for 2025, all seemingly powered by real-world AIP adoption.
And leading to serious profit, nearly $500 million GAAP profit in just one quarter, mainly from that accelerating U.S. commercial engine.
Right. So the question, it really isn't if AI is driving growth for them anymore. It feels like the question now is how quickly this commercial momentum is fundamentally changing the company, maybe even eclipsing that legacy government contractor identity.
Which brings us back to Karp's ruthless pragmatism idea and that Rule of 40 score. 114%. If that really sets a new standard, this Rule of 80 frontier, well, how far ahead does a company have to be to hit that kind of velocity? And what does a metric like that even mean for valuing this next generation of critical AI-driven infrastructure?
Something to definitely chew on. Those numbers, they are game-changing, potentially.